Hey everyone. Hey, are you all checking out this action on Microsoft and Apple? Because you probably should be. You might not even be trading Microsoft and Apple, but it's important to understand that when we look at the S&P 500, these are the two biggest stocks in it, meaning that the S&P 500 is a what we call a market cap weighted index. So the higher the market capitalization, the more influence they will have on the benchmark. Now, the S&P 500 is an index, and when I say it's a benchmark, well, here's the thing. In the institutional trading world, which is where my background was for 20 some odd years, you need to have a way to evaluate or to judge whether your money manager, whether it's a mutual fund or an institutional money manager or one of the fancy hedge funds, you need to have a way to evaluate, are they doing good or are they doing bad? Because so every one of these funds has a benchmark that their clients can compare them to. Now, let me just give you an example. If the S&P 500 is up 10% and your fund is up 15%, you're doing a great job. If the S&P 500 is up 10% and you're up 5%, you're doing a terrible job. And they would say, "Well, why are we paying you to manage our money when we could really just go buy the ETF and invest in the index and do better than you?" So it's just important to remember that all these managers are compared to a benchmark. The S&P 500 is probably the broadest and the most important. But here's something I want to show you, okay? Now remember, the S&P 500 is 500 stocks, hence the name S&P 500. This is their top holdings. Apple 7.1%, Microsoft 6.3%. These two stocks together, okay, make up more than 1/8 of the benchmark. Again, it's 500 stocks, and we have two that together are about 13.5%. Next biggest is Amazon at 2.7. Then we got Nvidia. If you were to look at all 500, by the time you got to down to like 450, 460, 470, there are things that are just 0.5%, maybe 1/4%. But anyway, going back to this, so it's almost like whatever you're trading, you should kind of pay attention to what Microsoft and Apple are doing because they're going to have an they're going to have what's the right word? I'm not sure of the right word, but anyway, they are going to have an important influence on the broader market. So especially in the tech sector, if you're trading a tech stock, it's probably a good idea to these keep these on the radar screen because in some way, shape, or form, there's a good chance that your tech stock may follow these two, right? I mean, they're just the two biggest. So if they start to head lower, the tech sector will head lower, and then investors will start selling the other tech stocks and they're going to head lower. But anyway, let's just take a look at what's going on here because they have each done very well, but now they've been over the last, say, week or two, but now they seem to maybe be getting ahead of themselves here. So here we have Apple, right? And we see there was resistance at 155. So we got to resistance. Resistance is a large group of investors who are trying to sell their shares at or close to the same price. A lot of times when we get to resistance, a lot of times the supply side or the sellers overwhelm the buyers and they end up pushing the price lower. Now, a lot of times, all right, well, this is what happens, right? When a market's going higher, there's not enough supply to fulfill all the demand or sell orders to fill all the buy orders. When we get to resistance, all of a sudden the market stops going higher. There's more than enough supply to fill all the demand. But sometimes the investors who want to sell start to get a sense that, or they start to say to themselves, gee, there's got to be other sellers out there. That's why the price isn't moving any higher. So I want to make sure I sell my shares. So I got to make sure I have a lower price than anyone else. Because if someone's willing to sell at a lower price than I am, the buyers are just going to go to them. So as a result, we get an investor that might say, all right, well, I'm going to reduce my price from 155 to 154.90. Someone else might go from 154.90 to 154.80. And it goes into this snowball effect. So it happened there, it happened here, happened in here, but we got above it. And when we get above a resistance level, we call that a breakout. And it's not just symbolic, it tells us something. It tells us that the investors who created the resistance with their sell orders have either finished their orders or left the market, or finished their orders or maybe canceled their orders, but regardless, they're out of the market. So that sets the stage for the price to move higher. If you're a buyer, and you want to buy, well, all of a sudden all these sellers leave. Well, you're going to have to be willing to pay a premium to get sellers back off the sidelines, and that forces the uptrend. But we are getting a little bit overbought. Notice how this down here is what we call the RSI indicator, and it measures momentum. Momentum is a measure of how far something has moved in between point A and point B in time point A to time point B. If it's exaggerated, or I shouldn't say exaggerated, but if it's extreme, well, on the upside we call it overbought. If it's extreme on the downside, we call it oversold, right? Now you can see here oversold. I mean, we're not talking about that today, but I just want to show you oversold here, oversold. Overbought conditions, well, oversold conditions draw buyers into the market. That's why we rallied after we got oversold here and here. Overbought conditions draw sellers into the market because they're expecting a reversion to the mean, a reversion back into what would be the typical trading range. Overbought means we're above what would be the typical or historical trading range. Oversold means we're below what would be the typical or historical trading range. Now we're overbought, so there's a good chance that this brings some sellers into the market. So I would say just keep an eye on this. I just wanted to point it out, but overall it looks healthy. Sometimes things get a little bit ahead of themselves, and they got to kind of chill out. Being overbought is like a rubber band, right? It gets stretched, and once it gets unstretched, the stock could consolidate, meaning trade sideways for a few days. That relieves the oversold conditions, and it sets the stage for the next move higher. And pretty similar picture here in Microsoft, but it's like I said, all these things kind of, in some way, shape, or form, influenced each other. So there is a correlation, but we are overbought here. We broke this 275 level. Notice how the resistance converted into support. Well, this happens because there are people who sold here who tell themselves, man, I made a mistake once the share price goes higher. And they tell themselves, you know what, I want to buy my shares back, but I'm only going to do it if I can get them for the same price I sold them at. So I'm going to place my buy order at the same level I had a sell order at. And if there's enough remorseful sellers placing buy orders, this could convert the level to support. So make sure you check out our daily technical analysis lesson. I talk about this stuff a lot. And unlike other quote unquote teachers, I talk about things in real time with real practical market examples. I'm not talking about, oh, gee, last April I made this great call, or last May, blah, blah, blah. So I've been around the block a few times, and I think if you join stockmarketjobber.com, you will not regret it. All right, everybody, thank you, and I hope to see you soon.